Hey, it's Anthony Pietrobono here. In today's video, I'm going to walk you through some short-term trades I actually put on today and in the past week. We're just going to see my thought process through all. I feel like it would benefit you if I just shared what I was thinking and why I put on these trades. We're going to also see how they unfold in the coming weeks. So I'm putting this out there. Obviously, I could lose out on these trades or I could make profit on these trades. I'm going to show you what I did, why I did it, and then we're going to see in the coming weeks how the trades turned out. On this channel, I post educational finance content, mainly focused on stock market investing. And if you're looking to build your wealth through stock market investing, then consider subscribing. Give this video a thumbs up if you appreciate the transparency of me showing you all of my trades that I'm putting on and keeping everything 100% honest. Okay, here we're taking a look at my margin account, and what you're gonna see is I have a few positions open. The first thing we see is TECL. Now, I own 600 shares and I'm using margin to own these shares. The total value is $184,794. Average cost basis of 307.991. I averaged my cost basis down as we saw the dip from the poor news and the poor market reaction to Trump. This is a triple leveraged technology fund, meaning that they are leveraging whatever money they're given 3x. So whatever you get in returns from typical technology companies, you would get 3x the returns, and whatever the market does, when the market goes down, you would likely go down 3 times what the market would go down in the tech companies because of the triple leverage. So it's 3 times more volatile than a typical growth tech company. I personally have faith in tech companies growing, and we can take a look at the top 10 holdings now. We see that it's Dreyfus, which is government cash management, Apple, Goldman Sachs, Microsoft, Visa, Nvidia, MasterCard, Adobe, Salesforce, and PayPal. Average annualized return over the last 5 years was 60% per year. Average over the last 10 years was 43% per year over the last 10 years. Average over the last 3 years was 51%. And this past 1 year has been a crazy rally, 83%, because tech has boomed due to coronavirus. I am in the camp where I believe that technology has been accelerated because of coronavirus, and we're going to continue to see technology gains, the technology sector growing at a more rapid rate than most value companies. So I am more bullish on tech companies than anything else. This is why I chose this triple leverage tech ETF fund, where I can go ahead and get triple the gains if it moves in my favor. I believe it will move in a positive direction. That's why I bought the shares on margin. These 600 shares I own with TECL, valued at 184,000 US. I plan on holding them until roughly after the election, or unless we see a massive rally, a 10-20% spike that's coming up once we get stimulus and the news of Trump being fully recovered. Those two things could force a massive rally, a 10% boost. And if I see that quickly, I might decide to take profits. Because remember, 10% on this position that I have right now would be 18,500 US. And for those of us in Canada, that would be upwards of $25,000 Canadian profit in the span of 1 to 2 weeks. So I would likely take that profit if we do see that. I am betting on the fact that we will see Trump fully recover in the next few days. We will see a stimulus package be released in the coming weeks, and we will see Trump be reelected as president. In my opinion, if we see those 3 things, the stock market will go to new highs. That is what I personally believe. That's why I made these decisions. And looking at the probabilities are pointing towards all those things happening. That's why I made that play right there. Second position we see is Square. I own 400 shares and I averaged my cost basis in as Square was actually going up. Most of the times I say don't buy in green days. Square is one of those companies that I massively believe in. If you look at my past companies, I have said to buy Square. Square is disrupting all the banks right now. And Square is going to continue to disrupt all the banks. If you want more information on Square, check out one of my past videos on the top growth stocks to buy. I gave a breakdown of Square as a company. So I own 400 shares at an average cost basis of 176. I'm currently up 1,000 US, and I just started this position a few days ago. Both of these positions, TECL and Square, I started these positions 2 or 3 days ago. So it's fresh, and I'm bringing this to you now. And again, I will plan to exit these positions in the next 1 to 4 weeks. Short-term trade. If the trade doesn't go my way, I will essentially hold longer until we see the trade play out. That's my thought process behind it all. Next up, we see Tesla stock. I own all the Tesla shares. I've talked about that before. We're not going to talk about that. And the last two positions we see are actually some options plays. My previous video was talking about why I see Tesla stock rallying up into the Q3 financials report. And you can check out that video, I'll put it in the cards. And I'm backing it up with my money. Lately, I haven't wanted to experiment with options trades because I did make some options trades where I lost almost all the profits I made from the previous options trades that I made. I was only up on a few thousand out of all the options trades I've ever made. So I figured, you know what, maybe I shouldn't make options trades anymore. However, in this one scenario, I'm feeling more confident again, and I'm going to play with some house money where I made some profit on some trades, and I'm going to take some chances because I believe I could get 100% gains on these options trades. So let's take a look at the two trades. The first one is again on TECL. I believe that we're going to see a spike in TECL once those catalysts come to fruition. If they do come to fruition, like I just named, with Trump recovering, the stimulus, and Trump being reelected, I see tech stocks booming another 10 to 20%. So with that being said, I have a 320 strike price call option on TECL expiring October 16th. This, in my opinion, gives us enough time to see the stimulus bill be passed and Trump making a full recovery. Those two things, I believe, will push the stock up at least 10%. This is TECL. This is triple leveraged fund. So TECL is triple leveraged, which means that tech companies would need to go up about 3 or 4% to see TECL go up 10% because of the triple leverage. However, don't get it twisted. Remember, we can see the opposite happen. There's going to be massive drops if we see a decline in Trump's health. I am aware of the risks. That's why I spent $2,000 US on this options trade. And remember, this options trade will expire worthless if TECL is less than $320 or $320 per share by the expiration. Currently, as of October 6th, TECL is $308.7 per share. We need TECL to go to 320 plus, more like 330 to make this break even, essentially, for paying $2,000. So what I really need to see is TECL go to 340 to make some good profits by expiration. That's a long ways to go. It's about 8%, 10% from where we are now. That's why I said we need to see a 10% boost to get the profits that I am anticipating. The second trade is the Tesla call options I just put on minutes ago. And I bought this when Tesla stock was trading about $4.18 per share on the dip today because Jerome Powell was speaking about the current state of the economy and we saw a sell-off. So I bought the call option because, again, like in my previous video, I'll list in the cards, I believe Tesla could potentially rise upwards to the all-time highs of $500 a share running into the Q3 earnings. So I gave myself extra time. This call option expires October 30th. We know that earnings are going to come out either October 21st or October 28th. So I'm giving myself enough time to see these come to fruition. My strike price I chose is 430. Tesla stock was currently trading at 418 when I bought it. So with this strike price of 430, what I would need to see to make profit off this call option would be Tesla trading at about 440 or 450 a share by the end of October. By October 30th, I would need to see Tesla trade ideally at 450 a share or more to make significant gains on this call option. Look out for that as we're coming up. If we see Tesla at 450 by the end of October, we know that this trade worked out well. If we don't see Tesla at 450 a share, if we see it at 430 or less, we know that this trade didn't work out and I lost money. Same with TECL. By October 16th, you can take a look at TECL, that's the ticker. And if we don't see that TECL is trading at about 340 or more, by October 16th, we know that I lost money on this trade. So you can be paying attention, you can follow along, this can be fun for you to watch, and we can see my trades, my thought process, and see how they pan out. If you appreciate the transparency of all the trades here, give this video a thumbs up, subscribe for more videos just like this one. Let's see how these trades pan out. Of course, we can't fully be confident in what happens in the short term. There is always a risk, so I am playing with smaller dollars, a very small portion of my portfolio. Remember, this may seem like a lot of money to some people. For me, this doesn't seem like a lot of money. My portfolio is sitting closer to around $800,000 right now. So for a portfolio of $800,000, for me to put $1,000 and $2,000 into call options, that is a drop in the bucket. So always keep that in mind. Again, thanks for watching. Subscribe for more videos just like this one, and I'll see you in the next one.